So does today's big reversal in tech tell us that this rally is ready to run again? Well, joining us now is Joe Davis, Vanguard Global Head of Investment Strategy Group, and Kevin Mon, Hennion & Walsh CIO. Great to have you both here. Joe, I'll kick this off with you because we basically closed at session highs for the major averages. Yeah, we had a little bit of a drawdown last week. We took a breather, but now we're back off to the races. Does it continue?
Well, certainly there's a lot of positive tailwinds. I mean, you have an economy that's likely stronger than, well, we actually don't know what the reporting is, but stronger than I think some would suspect. You have earnings that are generally coming in line or stronger than expected, and then you have the AI deployment, which is a powerful tailwind. So again, there's risks out there. But right now, our theme going into next year is what I would call rational exuberance, at least so far. I worry when there's too much momentum in the market. Interesting.
Kevin, want to get your thoughts.
Go
ahead.
Last week, the markets were climbing that proverbial wall of worries, right, Morgan, with investors having concerns over valuations, AI infrastructure spend, big tech earnings, and the government shutdown. Now we come into today, and one of those worries has seemingly been alleviated with respect to the government shutdown, and we got some positive comments from Jensen Huang around the AI infrastructure build-out. So I believe we continue to move higher from here through the end of the year, likely in those same areas that have experienced all the growth thus far this year as portfolio managers and retail investors try and play catch up. But there will be more short-term bouts of volatility, and in all likelihood, each bout of volatility will be greeted with more cash coming off the sidelines. Yes, the proverbial buy the dip mentality will be back.
Okay. Joe, how much has the global story for equity shifted relative to the U.S. as we look ahead to 2026? Is there as much room for the U.S. to run as there is for some of those other markets?
Well, again, I think, at least in our view, if you're, I would say the more bullish you are on AI, the more you will start to look outside the tech sector in the U.S. Now, you have to give this 1 or 2 years, but it sounds counterintuitive, but it's actually a very strong thesis. And that is, if AI starts to transform other industries, if it is as big as many hope, you're going to see that profitability and that earnings expansion start to extend outside of Silicon Valley. You may not see it next month, but that's what we're certainly urging and reminding clients globally from our perspective.
And Kevin, speaking of, you like Amphenol and Vertiv?
I do. Think about Amphenol, another ancillary benefactor of all the AI infrastructure spend coming from the industrial sector. Their stock is up nearly 100% year to date. They supply connectors and internet connect system to data centers. And of course, Vertiv supplies the heating and cooling solutions, specifically the cooling solutions that data centers need. Vertiv itself is up over 70% themselves year to date. So it's not necessarily only in the semiconductors and chips where you're going to find AI revolution-oriented growth opportunities from here. But pay attention to valuations and don't spend too much to get some of that future earnings growth potential from some of these AI infrastructure plays, John.
Joe, I'm just looking at your notes here where you talk about business investment is providing a backstop. How is it providing a backstop, and what does that mean in terms of how you position yourself, not only for the rest of the year, this year, but now 2026?
Well, certainly we have to look towards 2026. And again, this year has been a very good one from the equity markets. Business investment, is really focused on the AI space, both the infrastructure and the chips, and that will continue very likely next year. We talk about there's a small probability, but non-de minimis, that you could talk about high 2% growth in a GDP from a U.S. Economic perspective. So again, more risks from the labor market in the near term. But I think you got to start thinking about how does the AI story broaden. There's a lot of good news priced into the tech stocks, and I understand the interest and the momentum and the excitement. But if AI is as transformational as we think it is, you're going to start to see those profit opportunities expand beyond the tech sector.